As hopes of trade war development took good turn after it is known that there won't be any delisting of Chinese companies and markets are expecting that something positive out of trade talks will come between US and China, and due to this markets are positive. Hence Asian markets are positive today, while it is to be noted that Chinese markets will be closed for a week. Now if you talk about Indian markets are also trading in a quite good, and right now Sensex is trading with the actually Sensex has fallen right now, and Sensex has fallen by 121 points, but it has opened the day on a higher note today as it opened on 38,813. While if you talk about Nifty has also fallen by 31 points right now and it is trading at 11,442, but it opened today again at 11,515 after it closed yesterday at 11,474. So there is a mild decline today in Nifty and Sensex, but overall the mood across the Asian markets are quite positive, as Nikkei is up by 153 points, HSI index is up by 137 points, ASX 200 which is index of Australia is also up by 14 points, and Kospi which is index of South Korea is also up by 11 points. So now let's look at all the economic and political factors that is driving this mood. It is to be noted that economic data was not quite good, and even despite that the market is in a very good mood because of good political factors. So first let's take a look at the economic factors. Economic data from Asia was quite good, while that from Europe was in the line of expectation, so that's why market did not reacted much into that. Economic data from in the Monday morning from the land of China was better than expected, as manufacturing PMI came out to be 51.4 while expected value was 50.2. More importantly, the official data showed that manufacturing PMI was below 50 at 49.98, but it was above the expectations, so that also came into the good surprise, but it still means that it is a contraction, and more importantly it is a contraction for fifth straight month, and this shows that economic outlook of China is not that great, and at the same time it also points out the case that there will be new fiscal and monetary stimulus by the Chinese governments. Now Chicago PMI for US came at 47.1 for month of September. This is worrying sign as it is well below 50, and more importantly this is to the lowest level in last 10 years, and if we are paying more attention to trade, but everyone is paying more attention to trade talks and they brush aside the weak economic data. Unemployment rate in Europe has fallen to 7.4% in August, which is again at its 10 years low. Last month the value was 7.5, and in the economist poll by Reuters it was predicted that value will remain same. So fall of 0.1% actually came as a surprise. While unemployment rate has actually fallen is a good sign, but this rate is 10 years low, meaning last time it was around this level was during the financial crisis. So from historic point of view this rate is worrying, but investors would not be unnecessarily stressed, and as unemployment data of major countries like Germany remain unchanged. While CPI of Germany came out, which is inflation, came out at 0%, but analysts forecasted it to rise actually to 0.1%. UK is on the verge of economic recession as its GDP for second quarter, which is from April to June quarter, was minus 0.2, means negative, and GDP of Jan to March quarter was however revised from 0.6% to 0.5%, but coming out negative in this quarter is a worrying sign, because if there is a contraction of 2 straight quarters, contraction means value is negative, then it is considered to be a recession. So if in next quarter the value of GDP again comes out to be negative for UK, then UK will officially be in recession. While retail sales increased in UK for 0.5% as compared to minus 2.1%, the retail sales in Japan was better than expected and it came to be 2%, while analysts forecasted it to be 0.9%. If it come to India, output of 8 core sectors in Indian economy grew at mere 0.5% in month of August, while last year it was 4.7% and this year it was just marginal 0.5%, and infrastructure output was actually negative for August month and it came to be 0.5% negative, while last time it was 2.1%. So that is again a worrying sign of slowing Indian economy. And another worrying sign is that current account deficit came at 14.3 3 billion in second quarter, while fiscal deficit has reached to the 78.7% for whole year, and by the end of August the fiscal deficit stood at 5.54 lakh, while total target of fiscal deficit is 7.03 lakh. Now it is worrying sign that it is showing Indian economy is not doing very great and things might become worse ahead, but at the same time market is positive and everyone is looking it as there will be more rate cuts and more stimulus by the monetary policy, and rate cuts will also be positive for the economy also at times when rates are already high. So considering that, it is taken in the positive way and market is not worrying too much about the economic data. Now if we talk about retail sales, they seem to have picked as the Navratri season has begun, and it is high time. There is a reports of slowdown and it was expected that demand won't be that great, but it is reported that compared to last year on the first weekend of Navratri there was increase in sales by 10 to 14%, and even though it is reported that sales in e-commerce giants like Flipkart and Amazon was quite high, and in fact it was double than the last time, but even besides that there was quite good sales in brick and mortar stores. So this removes some doubt of economic slowdown in the mind of consumers as consumers are spending. Although as we have pointed out, economic data still shows there is a slowdown and it is approaching, but since if consumers can revive their demand as they have shown the signs, but if they continue this trend then economic can improve. Now if we talk about oil market, oil production from OPEC countries like Russia and US has fallen in September. For US it is third month after July when decline was noted, while for OPEC it was the biggest drop in 8 years, and as per Reuters in September the output of OPEC was 28.9 million barrels per day. Now oil prices may have gone up after this, but more importantly the fall in output to such a weak demand scenario, and fall in supply is just adjustment to the weak demand scenario, and that's why even though prices may have risen, their gain is quite limited. And moreover it should be noted that loss in production is also according to the production cut. So this is already not such a huge sign, and it is more, we can say, expected to fall, but since demand is low, so there won't be much focus on more fall in the production. And now let's move to the political factors which is impacting the market. Now impeachment inquiry will be on investors' radar as key witness will give his testimony this week. US Congress has initiated impeachment process against Donald Trump after it was reported that he is taking help from Ukraine to inquire Joe Biden. In fact, he blackmailed the Ukraine and said that if they don't, then he will stop giving Ukraine the aid of $400 billion which is given to help Ukraine in fighting against the Russian-backed separatists. Inquiry is led by House Intelligence Committee, and if it is found that committee actually if committee found Trump to be guilty and they approved the articles of impeachment, then Trump can even be tried for his presidency. And it seems that US Congress is trying to get both the transcripts now for Trump's talk with Ukraine, which is for next year's elections, and also his talks with Russia regarding which he used to win elections in 2016. Now let's move to the trade war. As high-level Chinese trade talks are approaching, Chinese officials Wang Xuan said that both sides need calm and rational attitude. China is trying to convey the message that it is not in a trade war as a mad game, and they are looking for a rational approach towards the situation. And since few days there was a news that Trump might delist Chinese companies from US stock market, and due to that there was a lot of uncertainty and concerns in the market. But in June, in fact, even bill was introduced in US Congress that if Chinese companies do not provide access to audit and oversight, then they will be listed. And in fact, US has blamed that its companies face various issues in China like access to market and poor production of intellectual property rights. And China responded to criticism by saying it is opening its economy more and more, but its policies pertaining to the rights of foreign companies won't change. Now all this kept investors quite nervous for quite some time, but after that they started believing that this is such a drastic step and they won't be taken very much. And even later in the day, close aide of Trump, Peter Navarro, in fact confirmed that this news is only a fake news. So after that, markets again moved in a good mood as they believe this won't happen. Now if we talk about Saudi Aramco, which was witness of huge drone attack, and after that it lost almost 50% of its production. Now it has gained back that production and also its production capacity to pre-attack levels. This is very important as it will maintain the oil stability in times of emerging Middle East crisis. Now even though prices have gained today a bit, they are still contained as we told due to weak economic demand scenario. But if prices are quite contained, that is good news for countries like India, because India imports most of their oil and that is one of the major costs for rupee. So if there is fall in oil prices, that is actually a good news for rupee, and rupee might also in control, and it can also be to a higher level against dollar if oil prices are in control. And also if oil prices are in control, that might also keep check on inflation. Although inflation was already low, but if oil prices start rising very fast, then inflation also can start to shoot up in India, which at the same time will also impact the value of rupee, which can fall. So in that case, fall in oil prices or in control is actually a good news. Now if we have to conclude, we can say that although economic data ranging from Asia, Europe and US were weak, and even oil production data points to economic slowdown, but that could have impacted the market most. But as one important thing, oil data was more in line with expectations and also the economic data. So an average, we can say all the forecasts was already factored in the market. When political situations are uncertain, and especially when it involves US-China trade war, and since it is expected that trade talks between two countries might lead to positive outcomes, or at the best it won't lead to further escalation in the trade war. So that is enough for the market to keep them or we can say not just a good mood, or they are giving a sigh of relief, and that's why markets are quite in control today. So today's stock markets and oil markets is expected to remain high, while domestic factors like weak economic data may impact the mood, as we have seen right now Sensex and both Nifty are in decline, but that is very mild decline change, so it can also rise. So good for global cues and weak economic data from domestic front are in tussle with each other in Indian markets, and let's see who will come out as winner in the end. But all in all, global markets and in Indian markets are expected to remain high today. Bureau Report, Market Times TV.
आपको अगर हमारा वीडियो पसंद आया है तो इसे लाइक करें, साथ ही YouTube चैनल को सब्सक्राइब कीजिए और मोर अपडेट्स जानने के लिए बेल आइकन को दबाना न भूलें।